Hey. Right, bear with me. We've got 8 minutes until we have the FOMC rate decision. Let me just throw it out. I just had to come live and just get us straight in there. Get your comments in. Let me know what you think is going to happen. Just bear with me while I tweet out that I'm live before we get this. Before we get the decision and the inevitable. Oh, look at that. Right. Where's that? Let me know in the comments what you want me to cover. Let me know what you think is going to happen. Right. I will be coming to you live and direct now. I'm done. Okay, right. Hang on. Where is it? Hang on. I'm just looking for the I'm looking for. There we go. I'm getting a video ready for later. The live stream. Right. How we doing? Great to see you all. Let's get hang on. Let's get this party started, shall we? Right. Right, there we go. Right, we're on. All done. All sorted already. How's everyone doing? Great to see you all. We've got 6 minutes until the rate decision. We are obviously coming in with the expectation that the Fed is going to hold rates. There should be no change. It's the resounding and most likely scenario and outcome, but we'll see. Do make sure you drop a big like on the stream. Make sure you get the likes up. Make sure if you are new, make sure you subscribe. Make sure as well, if you're looking for anywhere to trade, you do sign up to BLOFIN. It's first link in the description, and I've put it in the chat there. It is non-KYC. It is the best exchange to use, and you get some great welcome bonuses when you use that Stonksy sign-up link. So do make sure you sign up to that. And of course, we are still running the discount on Stonksy. It's the indicator you see on screen. But you also get full access to the oscillator, the Discord server, and the trading bots. We run trading bots on BLOFIN, so make sure you do check that out. But yeah, we've got some great viewership. Make sure you are subscribed. But yeah, for those of you watching on X, make sure you hop over to the YouTube channel. It is in the X account bio. You can also find us on YouTube just by typing in Stonksy Indicator. And make sure you subscribe. We are getting close to 2,500 subscribers, so would appreciate that massively. But yeah, like I said, make sure you click the link in the description or in the chat. Sign up to BLOFIN. It's an incredible exchange, non-KYC. You sign up with just an email in under a minute. And we are still running 20% off Stonksy with code BOT20. So that's the link is in the description as well. Second link for you people on X, you can find it at stonksy.io or in the Stonksy X account bio as well. So you get 20% off your first month of Stonksy. Use code BOT20. So it's this one you want when you come onto the website. This plan here, 20% off. It takes it down to £116 for your first month, and you do get access to the indicator, which you'll see here. We've just put a new video up on the channel discussing how to utilize the channels in depth. Come and check that out as well. And you get access to the oscillator, the Discord server, and the trading bots that we run on BLOFIN. So, yeah, we do have automated trading bots that trade on behalf of users on BLOFIN. You don't have to lift a finger to use them. So do come and check that out. Sign up while you can with the discount, because I think we're going to be ending it after this week. Right. Delete that. Howdy. Dunder Thunder, I'll have a look afterwards, mate. I'll have a look after it. Did you try the hot dog? I didn't know. From Istanbul, thank you, Tunke. Let me know. Yeah, let me know where everyone's watching from. Got 66 viewers. Great viewership. Thank you. SWC said you do the show in your birthday suit. Is that true? Well, you can see me right here. Nope. I don't. And obviously, you can't see below, but I do have shorts on. So, no, that is not correct. SWC is lying through his teeth there. We've got 2 minutes to go. Let's see what we're going to get. We should be ready. Let's get on. We'll get on here as well. Ready to see. It's going to be, it's going to be a massive shock if it's anything but a hold of rates. The market will tell us itself. We'll be able to see from the market reaction if it is anything but a hold of rates. When is it? It's in 1 minute and 20 seconds. 1 minute and 20 seconds until the Fed announces the rate decision. And then in half an hour is when Jerome Powell's press conference will start. So make sure you stick around. Don't disappear after the rate decision's announced, because we will be watching the Jerome Powell press conference where he'll give his speech and then he'll take questions and answers. So don't go anywhere. We'll be watching that live on stream as well afterwards. So do make sure you stick around. But yeah, we've got 45 seconds to go. So make sure you do all smash a big like. Get your likes in. We've got 71 people watching over on YouTube and a lot of people watching on X. So make sure you get your likes in. Make sure you subscribe as well. Click the likes, subscribe, and make sure, of course, you sign up to BLOFIN. The link is in the description. And I'll pop it in the chat again for good measure. Drop coming, says crypto investor Tamil. So Tamil thinks we're going down. Right, got 20 seconds. Is everyone ready? Go, 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 go. Get ready, get ready, get ready. 10 seconds to go. And we'll be coming in hot to see whatever happens next. But yeah, do make sure you stick around after the rate decision. And boom, there we go. There we go. Oh, what's going on? Nothing major. We did pop up to the upside then. Are we going to get much? We've not got much so far. I'm guessing it has been a hold. Yeah, unchanged. No change on rates. So Bitcoin is currently liking that news. We are popping upwards now. The S&P 500 is liking that news for sure. Look at that big old 1 minute candle on the S&P to the upside. Bitcoin is now starting to follow with more speed. We are hitting that upside more aggressively. The S&P really like that. What come out then? And we are heading up faster. There we go. There's the pop. There's the pop higher. So now we have half an hour to go until Jerome Powell's press conference starts. So don't go anywhere. 88 people watching. Wow. Do make sure you drop a big like. Make sure you subscribe as well. Hit the subscribe button. And yeah, do make sure you sign up to BLOFIN. It is first link in the description and in the chat. And of course, yeah, you do get 20% off your first month for Stonksy when you use code BOT20. So you find this is the indicator here. There's many different working parts, such as automated SR lines, the background color change, which we can cover in depth, the oscillator, and then you do get full access to the Discord server and the trading bots. We run automated trading bots on BLOFIN, so they open and close trades on behalf of users, trade for users. You don't have to lift a finger. You do get full access to them as well. So second link in the description for you people on YouTube, stonksy.io, or the link is in the X bio for you people on X. And yeah, here it is. Use code BOT20, so it's BOT20 in capitals, and it's this one you want to click on. Click this button and put that in at checkout in the box, and that gets you 20% off. So do make sure you come over. You're growing, buddy. That's a good thing. Keep it up. But yeah, we didn't get much then, did we? We didn't get much. There wasn't loads of movement. As you can see on the SPX, we did get a huge shoot up, and then we are heading to the downside now. Bitcoin is doing that as well. We're taking an aggressive plunge to the downside here. Can I do an analysis on about Bitcoin? I mean, yeah, I suppose. I mean, at the moment, it suits its name, doesn't it? Because it looks like complete ass. So it's fitting its name pretty well. There's your daily demand in there. Any retest that it wants to hold to the upside needs to obviously break this downtrend here to then maybe go up towards here-ish, potentially. But yeah, at the moment, it's suiting its name because it looks like complete ass. So there you go. Little quick analysis there for you, my friend. But yeah, right, we've got a bit of a break now. We've got just over 25 minutes to go until Jerome Powell comes on live stream. 5-minute candle looks mad, yeah. The 5-minute candle. I mean, we didn't get much of a shoot up, did we? We didn't get much volatility. But there we go. Swings and roundabouts in it, guys. Swings and roundabouts. But yeah, let me know what you'd like me to cover as we wait for Jerome Powell to come and speak. Do make sure you stick around because we will be watching the press conference live on stream. Look at Circle. Yeah, let's have a look actually. Who's looking at Circle on today's early stream? Whoa! Wow. Look at that thing, just doesn't stop, does it? The thing is, I'll be honest, when it was around here, I was thinking it would take the kind of path of distribute down and then level off and then go. But it literally just has gone up and up and up. And the thing is, the higher it goes, the harder it falls, I imagine. I mean, it's up 20% today. What's going on with... Oh, is this because of... There was a stable coin bill, wasn't there? Passed in the US today, a stable coin bill. I mean, look at Coinbase, up 14%. Wow. Coinbase is absolutely tearing it up. Look at Tesla out on its own now, up 2% today. But yeah, I mean, Circle and Coinbase absolutely flying today for crypto stocks. But I think there was a stable coin bill passed in the US today. Would be actually, let me have a look. I'm sure there was. Crypto bill is very close. I'm sure there was a stable coin bill passed today. Maybe not, or maybe it's going to pass. Yeah, maybe it's like close to passing or something. Something to do with stable coins. But I mean, look at that, 20% on Circle. And I mean, now, you know, if you would have bought on day one of listing, which you would have had to have balls to do because obviously it could go completely south. You know, even if you would have bought in the middle there, you're up over 100% now on that. Which is insane, isn't it? But I mean, yeah, look at Coinbase as well. Bang, thank you very much. Weeble's actually finally getting a bit of movement. Finally. Let's see. Yeah, so kind of steadying off now, aren't we, on Bitcoin? Got in at $88. Genius. But yeah, mate, yeah, that's a G. Well done, well done. Well done. Doge, yeah, let's have a look at Doge for Dunder Funder. He did ask before. Okay, so this was the area that we had outlined last time when we come down towards these levels. As you can see, we wicked right into there. We even closed down here on the daily and then obviously pushed back up. Now, we are looking like potentially we're heading into there. What I would like to see, though, you would kind of maybe like to see this area hold because of the impulse up that we had. So impulse, consolidation, there's your second leg. So you would potentially like to see this area hold. If not, I think a retest of this area is probably, unless, you know, the market starts completely falling south, you would like to think a retest of this region here would hold as well. Because if not, it's going back towards like 10, 11 cents. But I think we could definitely see a front run and a dip into there before a rally up. If not, I think shoot into there and then go up there. If it falls below here, then yeah, start looking. I would be looking down here then. So two scenarios there. I think, should it get there? Obviously, we're probably relying on Bitcoin. If Bitcoin makes a U-turn here and starts heading back towards 107, 108, maybe even 110K, then obviously everything else is just getting dragged back up, isn't it? So, but if it lines up, then that's probably what I'd be looking out for, yeah. What do you think, mate? What have you got your eye on for it? Anything similar? What is Bitcoin even doing? Nothing. Literally nothing. We shot up a little bit there on the interest rate announcement and then just fell back down. But we do have the conference coming out in 20 minutes, so that will start in 20 minutes. I clipped the best bit of the show earlier, post on it. Did you? Okay, let's go and have a look. Hang on. That was great. Where is it? Where? You posted it on X? Oh, is this it? Is this... No? Is that the actual... No, that's the actual stream, innit? Where, mate? Where have you posted it? Or you are going to post it on X? It's not on there. It's not on there from what I can see anyway, unless I'm completely blind. Let me know. Missed a short earlier, 105,400, and now missed a long at 103,000. It happens, mate, doesn't it? It happens. These aren't the easiest conditions to trade. Like, good TA, thanks, brother. Was looking at 16,411 or below. What did I have drawn then? Let's see. 16,411 or below. Yeah, I mean, that would come in around there. So you'd be looking for maybe a sweep of these two lows, wouldn't you? Which would make sense, yeah, because, you know, them clean equal lows there, aren't they? You know, a sweep of them would definitely potentially lead to a bounce. So something to watch out for sure. A sweep of them to equal lows. Or I think, yeah, maybe a little bit more down into this demand, into the origin of the leg up. We could get either of them, really. Not seeing much strength on Bitcoin overall, though, are we? Hang on, yeah, get it posted, mate. Get it posted. Long on fart again. Oh, mate, you love it. You absolutely love Fartcoin, don't you? You absolutely love it. We've got 15 minutes. Got 20 minutes. Well, just less until Mr. Jerome starts speaking. Do, 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 do. Right. It's there now, is it? You're not lying to me. Let's see. It's not? Oh, no, it is. There you go.
Can you cook a hot dog in a kettle?
Oh, that's a fun one. Yeah, you can totally cook a hot dog in a kettle, though it's not exactly gourmet cooking. Just fill the kettle with water, bring it to a boil, toss in the hot dog, and let it sit in the hot water for about 5 to 7 minutes. The water's plenty hot to cook it through. Think of it like a quick poach. Just don't try boiling multiple hot dogs for ages, or you might gunk up the kettle. And maybe give it a good clean afterward. Got any other quirky kitchen experiments in mind?
No, but thank you anyway.
No. I nearly just spat my water everywhere. Give it a good clean afterwards.
She's brilliant, isn't she?
That was so funny. That was very, very, very funny. Very funny part of the stream. If you didn't get that, guys, make sure you go and obviously click on Save Those X. Follow him if you're not. But yeah, I'm gonna repost that. Give it a like. That was such a funny part of the stream today. Such a funny part. Make sure you go and check it out. If you don't follow him on YouTube as well, obviously make sure you give him a follow as well. But yeah, do go and check it out because that was very, very, very funny. Tell you what, we had some mega viewage before, didn't we? I don't know if it'll tell me now. It won't tell me exactly how many views we've had unless I go on something else. But I mean, yeah, that was hilarious. So funny. Let me come back on camera for a bit. It's just incredibly hot. It is so hot to try and sit here with this cap and snood on in this weather. But for you guys, I'd do anything. So yeah, there we go. Anyway, let's go and have a look at some liquidation stuff. Got 15 minutes until Mr. Jerome starts speaking. So we do have a hotspot down here, don't we, at 103, 100, which I'm guessing lines up with the low. Yeah, so the low of there. So we could maybe see a run down there before a reversal if it's after taking liquidity. I mean, that was a fairly long lower wick on the past hour, weren't it? That was a fairly long lower wick that we had then on the past hour. Let's take a look at the weekly maybe. Yes, we have ran liquidity hotspots there. Like I said, we've got a similar hotspot building on the weekly time frame down here. So yeah, I think it's just a waiting. We need to just see the market reaction, don't we? But yeah, I mean, hey Wiz, have you seen Circle and Coinbase today? Look at Circle go. It's just insane, isn't it? Look at Circle go. $183, nearly 23% up today, following that news about stablecoin bill in the US. And Coinbase just absolutely ripping as well. I mean, look at Stonksy go there. But yeah, I mean, definitely the two stocks for today. Hey, Wiz, have you seen Bull actually starting to move? Up over 3% today now, Bull. I still have full faith in this, to be honest. And I think when you look at it out now, if you look at what it's doing on the hourly now, I think that is coiling. Look at that. Oh, we've ended the red on Bull. Weeble. And we're coming into a green background on the hourly now on Weeble. Look at that. Past hour, we've ended the red. and we've got into the green. I think that is coiling up to be a fantastic looking chart, to be honest. I think that is coiling up to be absolutely fantastic. The fact that Stonksy's exited the red as well after catching the rest of the drop down and has gone into the green does make me think, okay, something's going on here now. And I think the way it's obviously looking like it's getting a bottoming out pattern and the way it's starting to just chug ever so slightly up. I mean, if we clear that kind of $11.35 range-ish, where it's obviously had resistance all along here, if we clear that, then we could really start obviously powering towards about $14, which from here is a cool 30-odd%. So, yeah, I'm excited looking at that. I'm excited, but I mean, yeah, look at Circle and Coinbase. I mean, Circle's IPO has been nothing short of a huge success on it so far. Absolutely unbelievable. GME's having a good day today, up nearly 3%. And another one, it's come into this demand zone that we covered, bounced, and obviously looking now, could come and aim to fill this gap, which would be an exceptional pump, wouldn't it? But yeah, I'm excited looking at Webull now. Are you still holding on to your CFDs on them, Wiz? You still holding on to them? Let me know. We've got 10 minutes to go. 10 minutes to go until Powell starts speaking, so hold on to your hats. Hey, the Papmeister. How we doing, Pap? You all right? Great to see you. Great to see you. Yeah, we've not had much, to be honest, have we? We've not had much. Make sure you do drop a like, by the way. Make sure you subscribe. But yeah, we've not had much. We have pumped a little bit and we come down again, but yeah. Not bad, pal. Daughter just gone to bed, so chart scrolling now. Yeah, nice, mate. Yeah, nice. Little little time for the charts. Can you check SPX? Yeah, I mean, I think SPX has potentially maybe topped out before a pullback. Maybe, obviously not. Maybe not topped out in terms of high time frame play. But I mean, yeah, the way that obviously it was chugging up, and then normally when you get something that's like slowly grinding up like this, so you get slow grind up. When it starts entering its parabolic phase, as soon as that momentum is lost, normally that's then when pullbacks start, and then it might bounce, and then people get excited again, and then it'll go lower. Personally, I don't know whether it's topped out, obviously high time frame or not. I think the wider market will decide that. But in terms of a pullback, I don't see any reason why it can't pull back into just below $1, like mid 90 cents, and then power then to the upside if the fuel is there, and obviously if the wider market momentum is there. So I think, something to have an eye on is potentially that. Apart from that, I'm not really sure. Just a case of if it can enter proper price discovery, isn't it? But normally, like when you have something just slowly, and maybe we'll see something. No, not got anything directly. So that was just kind of just a weird staircase up, weren't it? And then poof, on Fartcoin. But yeah, normally when you slowly grind up and then you get this parabolic push, as soon as momentum's lost there, normally that's when you get a deeper pullback. But who knows? I mean, we're green on the daily still on Stonksy. We've not got anything on the hour currently. But they're definitely something to keep an eye on. But I mean, yeah, it's either obviously regaining momentum and pushing to price discovery, and then obviously the sky is the limit. Or on a pullback, I would be looking at this area as potentially one area of interest. So those are my thoughts on it. What are your thoughts? What do you think? Let me know. I'm more than open to hearing your thoughts. Let me know what you think, mate. Yeah, we have got 7 minutes to go until our good friend Jerome starts speaking, so that should be fun. But yeah, let me know if anyone wants me to cover anything else. In the meantime, we do have obviously a little bit of time. Let me know. Make sure you are liked. Make sure you subscribe as well. It does help us out massively. Let's see what we're on. We're on 2.12k. So yeah, the closer that we get towards 2,500 subscribers is obviously the better. But yeah, do make sure you sign up to BLOFIN as well. First link in the YouTube description, and you'll find it in the chat now as well. Non-KYC and the best exchange to use. Crypto Rick says dog. Dog. See. Dog. Okay. Wow. I mean, what a pump. What a pump. What did that do in the end? Like a 6x? Did a pretty decent return, didn't it? Yeah, I mean, this thing now is obviously coming to retest, isn't it? This where price came into here. I think looking at it, let me have a look on the 4 hour. Oops. I mean, it swung fail. Has it swung fail? No, it's not. It's not cleared that low out yet. This is an interesting one because it's kind of on the same trajectory of something like Peanut and stuff, which is heading back down towards. Oh, look at Bull go. Where's Bull's pumping? Where's Bull? Bull is pumping. Up nearly 5% now. Sorry, mate. I'll get back to it. Yeah, I mean, there's the origin of the pump in it. You've obviously got retest down here, and then this is kind of where it went. I think this is obviously one area definitely to watch. And then it could come down for a retest of this region here. Down towards there. I mean, it could hold. It could hold now, yeah. If it starts to show strength, then that's all good. Obviously, we've got a clear line outlined by Stonksy here. This red line, that's one of Stonksy's automated SR lines that it draws. But, yeah, I think, strength-wise, it would reclaim that. Otherwise, I'd be looking for maybe pullbacks into there as potential areas of interest. So that's definitely what I'd be looking for on dog if I was interested. I mean, look at this. You look at something like this on the 4 hour, and I'm just fascinated to see what happens, because if this was an altcoin, you'd think, wow, this thing might actually be coiling up for a proper rip. So we'll see. Yeah, no worries, mate. Anytime. Got 3 minutes. Hey, sometimes he's late. Let's go, JP. Yeah, we've got 2 minutes. Tell you what, I'll just put this on. Yeah, normally it can be a few minutes late as well, can't it? I think we have a short pump, then crash. I think we might get. I think we might pump for potentially the rest of the week. I think the way that it's settled the past 2 days, I'm not sure where to. I suppose it just depends on how aggressive the pump is. But I could definitely see another retest of this SR zone here. Or maybe even come in. I mean, if you look at the 5-minute chart there, we've got, pretty easy areas, haven't we? That's a liquidity sweep. And we've got this. I mean, that is just begging to be swept, in it. Look at the state of that. You got a triple top there on the 5-minute. 1, 2, 3, and then slam down. This area is gagging to be swept as well for liquidity because, we don't have to go anywhere, do we? We don't have to go anywhere. We literally just could. And at the moment, it's literally just chopping people up. So we could just keep chopping people up in this range. We could do this for the rest of June and July, couldn't we? Up, down, up, down, up, down. Just keep chopping people up. But I think them two areas definitely, I mean, they look absolutely prime for taking liquidity-wise. You've got all this to run to the upside, to the upside again. This was obviously on the 13 red candles in a row that we had. So all this is just packed full of stops and liquidity to the way up, to then taking this high and potentially taking that triple top. So we'll see anyway. But obviously, yeah, we could definitely head to the downside as well. Oh, right, hang on. Here we go. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment.
How do I zoom this in?
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level.
Well, there's two saved, two well anchored.
As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I have noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
So that's the end of that.
Thank you.
Now on to the Q&A.
To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic...
Bitcoin's not really moved as well.
and the
Like,
timing of when,
even on the rate announcements, it's moved up a couple of $100 since Powell started speaking as well. It's not really doing much, is it?
Favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effective tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjusted over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term as you get out to the later years. It's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up.
Starting to really trying to creep up now, Bitcoin, isn't it? It's just slowly trying to creep up.
So that's what you see. You see
The S&P is
the effects of tariffs.
leading.
I think we learned
That's going up first.
after the March.
So let's see if Bitcoin follows.
Substantially higher tariffs were likely, and then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time, and what you see is an accumulation of individual assessments.
But you say in the statement that risks have diminished on that front, but the July 9th, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that they do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down, and that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you, Chris Regaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that have been pretty weak. Do you see any concerns that, the economy is weakening and that is a reason to cut rates going forward?
So we do, of course, monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5%, 2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. And that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that, there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true? And how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place? So
this is very much the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree.
Still not movement on Bitcoin, really.
And that you can make a case.
We've not still had much movement at all, have we?
I think
maybe it's waiting until the conference is over. Maybe
once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down, a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think
so. It sounds like Powell and the Fed are cautious on the effects of tariffs on inflation, and obviously on the overall economy and other economic data. Sounds like obviously they're cautious on what tariffs may actually do to inflation. Hence why maybe they're still not willing to cut.
Of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and it's I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
Yeah, what you start with is what's the effective tariff rate overall, and people are managing to that. But the pass through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick.
Nick Generoso of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed. And that means when it is time to look at resuming our normal.
Flat on Bitcoin, literally just flat, no reaction from the market at all, is there?
Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things. And I think as the data come in, you should see those differences diminish.
If I could follow up, you've said that policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression? some of the softness that Chris talked about in labor and housing. Why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not, we have to be forward looking. And the thing that every forecaster, every outside forecaster and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months. And we have to take that into account. So I think a backward looking look would lead you to a neutral stance, but we can't, we have to look at that. And because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass through of inflation and what's going to be the effects on spending and on hiring and all those things.
Mr. McKee.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction. And I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers about the outlook for the economy.
Okay. From my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned to right now to deliver that and to be able to respond in time and way. As the
nasty 5-minute candle on Bitcoin now.
And part of that is
the S&P is also taking a tumble.
We think we're in a good
but yeah, nasty 5-minute candle on Bitcoin.
That's what
heading to the downside.
Matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids picking up significantly, what kind of effect would that have on the labor market?
Sorry,
in the short
with
term?
what picking up?
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means like part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offered a really it was a great conversation, number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which is a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be. We've learned that tariffs are going to be substantially larger than forecasters generally thought. And, we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so now you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025. And that's a big part of the change. And that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right, we're looking for relief on rates when it comes to mortgages, car loans. Small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, we're trying to restore price. Best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high. Let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we could start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now. And inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months. And this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional, forecaster with adequate resources and forecasts for a living is forecasting pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs. And it will be someone in that chain that I mentioned, between the manufacturer, the exporter, the importer, the retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately the cost of the tariff has to be paid. And some of it will fall on the end consumer. We know that because that's what businesses say. That's what the data say from past. So we know that's coming. And we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years ago talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again. Right. So it's always forward looking. If at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad. Right. So we took very aggressive forward looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, were in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this, and they understand how they're going to go. And it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Thank you, Amanda.
We'll stay on for a few more questions and then we'll leave it there, because obviously the kind of importance of them is dwindling now, isn't it?
Then in a memo to staff in May announcing a deferred
Bitcoin's
resignation
bounced.
program at the Fed, you said you wanted to ensure that the Fed was
There's nothing major
right-sized.
happening.
Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said, no, and I sort of said as a pun, overworked, but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard. But I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it again respecting that we have critical missions to carry out. I've had a lot of experience in my prior careers, with headcount reductions and things like that. And this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
how is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and the effects will be at the margin. I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil.
Thanks, Chair Powell. Neil Irwin with Axios. There've been some cutback.
And I think we will leave it there, everyone. We have, watched, I think, probably the majority of the important questions and stuff. We've not really had much movement on Bitcoin. We've obviously had a little push up and then we're down, but we're not really too far away from where we started this whole stream, waiting for the rate announcement. So, yeah, we'll see, obviously, what we have in tomorrow's daytime stream as usual. Big thank you for joining me tonight. Thank you for spending your time. Thank you for watching the stream. And yeah, we'll see what we get, obviously, overnight. Until then, enjoy the rest of your evening. And I'll catch you all tomorrow. Bye-bye. Make sure you drop a like before you go.